Welcome back, everyone, to another episode of the EUVC Podcast. Today, I have two new friends of mine to talk about a Danish company, despite none of them being Danish. Max Kufner, he is, of course, the first we should touch on because he's an investor turned co-founder and CEO of Again, a Copenhagen-based biotech scale-up using ancient bacteria to unlock the holy grail of biomanufacturing using bear with me here, I'm very bad at tech, so for that reason, I'm going to say a bunch of stuff I don't understand. Utilizing CO2 emissions to produce supply chain resilient chemicals and materials. Again, is built on decades of research at DTU, Stanford and MIT, and is backed by HV Capital and a bunch of other great firms that I should mention the names of, but I will not. Secondly, we've got Jan Miczaika, a partner at HV Capital. Jan began his entrepreneurial journey co-founding the German e-commerce marketplace Hitmeister, went on to become CEO of mobile game studio Wooga, and then joined HV Capital in 2017, where he now focuses on deep tech. Before we start the show, a quick note. If you're building or running a fund, you know it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, Ace Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, Ace handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, Ace should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover status before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So guys, welcome to the pod.
Thank you.
Hi, thanks for having us.
So I said I was going to say a bunch of stuff that I don't understand. I did talk a bit to Grok about Again. I understand a little bit, but Max, could you just tell everyone what is Again all about?
Yeah, for sure. I think one maybe simpler analogy to use is, if you think of the way that we make most chemicals, fertilizers, kind of base products today, is we pull carbon out of the ground. We've been doing that for hundreds of years. We pull carbon out of the ground, and then we repurpose that carbon into different carbon molecules. That, is basically taking petrol or oil or natural gas, whatever, and converting it into commodity chemicals, especially chemicals, fertilizers, all the kind of things that essentially are used to manufacture everything in your room around you, from your wall to your microphone to your t-shirts. What we've figured out is how to do that without pulling the carbon out of the ground, but instead taking gaseous carbon that is already being, emitted elsewhere. It's the same thing, though. It's repurposing carbon molecules, just that we use bacteria and gas-eating microbes to do that rather than using chemocatalysis and oil. So that's the super simplified version. The more complex version, is definitely what my two co-founders would be able to tell you about, who are, PhDs and professors of the DTU at Stanford and MIT, who worked on this technology for about 15 years before we spun it out and started the company about 3 to 4 years ago.
And Jan, then tell me, why is this exciting from a VC perspective? And I noted, of course, you guys are not the usual climate VCs, and actually quite a few of the big investors behind this round and also prior rounds are not the natural climate VCs that you'd expect in something like this.
And exactly that's what makes Again so exciting. So maybe a bit of context about HV. About 5 years ago, we started investing into what for us was a new class of startups, which is deep tech startups. And for us, these are similar to, again, companies where the business value is not in a new business model or in a new geography or some twist, which is all fine. My colleagues do that. However, Maxi, me, Fabian, Emma, our team looks for companies where there is a spark and innovation, ideally from a lab, from a university. And what we saw is that on the one hand, it has a very positive climate impact, which is great. But then on the other hand, it really has the potential to redefine chemicals, one of our base industries in Europe. And so what we said is this looks like a very interesting journey we want to be part of, where on the other hand, we can maybe also help. Am I an expert on bacteria? No, definitely not. On the other hand, can I try and help Max and the team on setting up production facilities, internationalizing, figuring out funding, etc.? Yes. And this is why HV is very proud to have had the opportunity to invest in again.
Max, you come with a very special background for someone to be co-founder of a company, which is you used to be a very prolific angel, and then you also was part of the Atlantic Labs team. Shout out to Marc Olivier, of course, and the team there. Tell me about the decision to go and be a founder again.
Yeah, thanks. I mean, I guess the more interesting and unique element is that I am not a biotechnologist and I'm running a biotechnology company. That's the first thing that we all collectively had to get comfortable with, which luckily I've learned my way into the topic. Specifically on the kind of investor turned founder thing. I mean, I was a founder before becoming an investor, so I like to think it's more of a pendulum swinging each way. And to be honest, I kind of continue to view myself as both in the sense that I really enjoy doing both, and I feel like by doing both, you learn, the kind of best of both worlds. By building a great company, I learned what a great company looks like. I learned what great talent looks like, which on the flip side, makes me a better investor. And also by being an investor, I kind of understand what other investors want to see, which obviously helps us raise capital, from great other investors like Jan and like the GB team, et cetera. So I kind of view it as more of a symbiotic relationship. And I think that it's a model that, one, I was lucky enough at Atlantic to be allowed to do. The rest of the team at Atlantic was super flexible when I said, hey, I kind of want to semi-incubate this company and, do two jobs at once. And they let me do that. And that's kind of how we ended up really starting and scaling the company and taking the IP out of university and making sure it could be the success that we thought it could be at the time. I think it's not an uncommon model in the US. I think there's a bunch of funds where you have partners that incubate companies and invest at the same time. I think that, founders funds have proven many, many times that you can do that very successfully, doing what Anduril, Vada, Palantir, and a bunch of other companies. And so I think it's maybe something that will catch on more in the EU. I think from my perspective, I love it. And I think it's beneficial.
Maybe both of you can talk from the investor perspective or more broadly on the perspective of the power of serial entrepreneurs and people that really understand the journey, and maybe also reflect a bit on the lack of that in some founding teams, both of you from that investor angle. Because it is, I often think about this, the more I get into the ecosystem, oh my God, what a daunting task you're on if you've never been in the venture tech ecosystem before and then set out to build something big and great, compared to someone like you, Max, who have seen the whole journey and been on it before.
I'm pointing at Jan here, definitely.
So I started my first startup out of university and I was clueless. And I had the huge advantage of having very low personal burn rate, very low opportunity cost. And this was also a time when the venture ecosystem was not as mature as it was today. So this is literally 25 years ago. And I was able to build that company over 7 years, sell it, then joined one of my angel investments as a COO, built that company over 7 years and sold it again. Now, as an investor looking at serial entrepreneurs, I think serial entrepreneurs have huge advantages and one big disadvantage. I think the big advantages are they know how to work with investors, they know how to raise money, they may have a talent pool they can tap into, they have a personal brand, depending on how it went, they may have personal net worth to invest in the company. So on the one hand, it is very, very useful as a starting tool. Does it guarantee success? No. Does it increase chances? Yes. There is, however, a big disadvantage, which, to use the classic analogy, is the hammer and a screwdriver. I went from e-commerce to gaming, which is maybe not a natural jump, but it's still somewhat close. My fear is always when serial entrepreneurs choose a completely different domain to start their company in. That's when they can run around with a hammer when what you really need is a screwdriver. And so what I love are models where you have entrepreneurs, and I hope I'm not saying anything stupid now about Max, but I'd say the more parallels there are between the first, the second, potentially the third venture, the more effective serial entrepreneurs become.
So I'd probably agree. I think one area where it's interesting is focus specifically on deep tech, because one of the things about deep tech is that it requires huge amounts of capital up front. And so you have to be very good at both getting two things: one, large commercial contracts, and two, capital in the form of funding. And I think that that's something that lends itself more towards someone who's been through those cycles, relatively agnostically of what the actual underlying technology is. And I think that was the case in our business. We managed to, we work with a fantastic partner who's, been a great supporter of the business from the early days, and has, given us very large sales contracts that to an extent help de-risk future cash flows for the business. And at the same time, that's been a flywheel and allowed us to raise, a decent amount of capital. And so I think that's one area where, having been an entrepreneur before, made it easier to know that those are the vectors we need to focus on to kind of pull the company towards the future, because you're selling a vision and a story for much longer than you would be if you're building, some kind of software-based company where you can have revenue as a metric really early on.
Can you both comment a bit on the playbook of building in deep tech in Europe? Because a lot of people say we're missing this, we don't have it yet, and others say, well, you just need to know where to go and have the right advisors around you, and then it's actually not that lacking. And now I put in the Europe word, and I actually don't like that I did that, because I think that we're just as much finding our way as they are in the US when it comes to building with a venture funded model in deep tech. So I'd love to just hear your take on the playbook of deep tech.
One of the things that I've found the most insightful in building a deep tech company in Europe is that ultimately it's been really challenging from a talent perspective. And I think I'm quite open and vocal about that, in the sense that, we struggled to find the right talent that we wanted in Europe. And so we moved the company to the US very early on. And, that was something that, we'll talk about that more in a second, but that was something that was the result of basically learning about how optimistic fundamentally American scientists and engineers are, in a way that's a little bit differentiated to European scientists and engineers. I think there's just a cultural factor. We all know about it, but I think having lived through it ended up in us basically taking that leap way earlier than we may have done. And I think my general view to date is that, even the greatest European deep tech companies should be looking towards abroad. It doesn't have to be America, but should be looking towards abroad to find people who have a more risk-on appetite. At the end of the day, there's one vector, which is the co-founder, and co-founders will traditionally always be cultural outliers in some regard. But you need more than just a strong co-founder or a strong group of co-founders to build a company, especially with these deep tech companies. You often have like multidisciplinary skill sets across three or four areas, whether it's, in our case, genetic modification, fermentation science, chemical engineering. And you have to find just outlier personalities across all of those to build the business. And so that's kind of been the main thing for us. I always like to invoke the SpaceX example. Like, they built 3 of those rockets and had them all blow up before they got the 4th one to work. And I think the mindset of being like, fuck it, we'll blow it up and see how it works, is something that doesn't really lend itself to us. And, that's why we went so aggressive early on about hiring non-Europeans to help us build the company, even though we're still a European company in many ways. That's my kind of view on that. I'm keen to hear what Jan has to say on the topic.
I think a lot about like comparative advantages, and I love these studies on, figuring out who is leading in which technology, which country, which continent, etc. And then I often think about probabilities of success, and I think, let's say you're doing a fundamental AI startup, you have all the labs, all the semicon, all the people and all the customers, probably in like 50 miles around San Jose, in close to San Francisco. Will that increase your chances of success? Yes. On the other hand, if you're in chemicals or precision engineering or manufacturing, etc., is San Francisco a natural place to do that? Probably not. In the same way, if I'm starting a fashion label, I'd go to Paris and not to Oregon or whatever, to choose a random place. And so I think on the one hand, what Max says is obviously true, this risk appetite. But then if you are looking for these key people, then you can also figure out where to where to find them and then play on your strengths. So that's kind of one answer. And the other one is I'm a bit unhappy on how multipolar the world is becoming. I purposely spend time in San Francisco to get exposure. Should Max spend time in the US? Definitely. Should he spend all his time there? Probably not. If you're an AI founder, it may be 3 out of 4 weeks. If you're a chemicals founder, it may be 1 out of 4 weeks. I think every founder needs to figure out what ratio he or she spends in Europe versus the US and also Asia, and not exclude any of these.
Talk a bit more about
I would love to see you. Sorry, I would love to see you start a fashion company, though, Jan. So sign me up for when that happens.
You mean me? I don't know if I can say the brand, but wearing a 10 euro t-shirt.
10 euro t-shirt advice is very welcome on the podcast. So please do say the brand.
It's a very niche Japanese department store.
I love
called
it.
Something with low something.
I would love to talk a bit more about that multipolarity thing, and also maybe hear you comment on it, Max, how you think about dividing your time, dividing your inspiration, dividing also when you're building connections for the business. Like multipolarity means multiple things, right? What we're definitely also seeing is the geopolitical environment is such that you probably want optionality in your supply chain to be resilient. So I'd love to hear you comment on this current state of affairs.
I mean, I'm not a politician or an economist, and generally when I veer into any of those topics, I tend to say dumb stuff. I think the thing that's been the most insightful for me in building this business is realizing to what extent, particularly Germany, I won't speak for the EU writ large, but particularly Germany used to be, an industrial powerhouse, ignoring obviously what happened in the first half of the 20th century and, focusing on the rebuilding of the German economy. It was very much an industrial engine that we built, auto manufacturing, chemical manufacturing. I mean, if you look at businesses like BASF, we were the leaders in this space. And I think the industrial sector made up something like 50 to 60% of German GDP. And today it makes up 20% of German GDP. And you could obviously argue that the professional services took over but what we're seeing is businesses like BASF that used to be the powerhouse of German innovation and the economy, shutting down production and moving out of Germany. And I think that's a huge shame. One. Two, I think that there's, that's kind of part and parcel of what's going on. We shifted our economies out, a lot of our manufacturing out to low labor cost economies. And, that kind of worked for a short amount of time until we started realizing, we don't actually make anything here. And if, we end up in a position where we actually do see the need to make things, because things go downstream from making t-shirts, that's actually technological innovation that ends up becoming making chemicals and then making, semiconductors and making weapon systems and all that kind of stuff. It's a really bad place to be. So, I don't have the solution for that. I think that what I spend a lot of time focusing our efforts on is how can we build in Europe? I mentioned that we're going to the States. We do spend a lot of time thinking about ways that we can roll out our technology in Europe. There's a lot of industrial partners. We have partnerships and we're in discussions with most of the blue chip industrial players in the European sector. They're all very eager for our technology and to roll out our technology. There's not a lack of will. I do think there's a big regulatory problem that hampers European innovation. I think there's also a huge energy cost problem that unfortunately I'm not going to solve. But, I think that I am a strong proponent that we need mass scale reform to turn around certain European economies, segments of the economy. But until that happens, we as a business will allocate our capital to whatever area is the most productive for us.
Yeah, and how do you see this? You're investing in deep tech across Europe, obviously. Do you see founders think in the same way about production in Europe and partnering in Europe, or do you see that no, that there are strong nuances?
I'd say there's not a lot of geographic differences within Europe. I think also most startups are pretty flexible, as Max was also saying. If you have a high energy need and you want to stay in Europe, you're probably going to gravitate towards Spain. And then there's other comparative advantages. What I am seeing is certain founders, and I mean defense being the obvious one, is also being strategic around which investors to bring on board and from which countries. I think this is something which slowly is also permeating into other parts of deep tech. I mean, semiconductors is hugely geopolitical, as an example. So we're starting to see that slowly. So I'd say it's less about different countries, the Danes having a different view than the Germans. It's more about certain sectors where maybe internationalization plays a different role than in others. One thing which I'm interested in, so one company which HV has invested in, Neura Robotics, just opened a first production facility outside of Germany in China. And where I think the typical standard way would have been to go from Germany to the US, they're going east instead of west. Sometimes I wonder if, and I mean, this is not news, but, if we should not also, for certain industries, look at India, China, Indonesia, Japan, Korea, etc., and have a kind of multiple poles which we rely on also as startups.
However, have you thought about that, Max?
I mean, we've got our hands full with, being such a small company and already, moving cross Atlantic so early on. I think what's the nature of, let's say, the chemicals industry and the products that we make across specialty chemicals, commodity chemicals, fertilizers, and foods and ingredients, these are all, fundamentally such important markets, and you need the products that we make everywhere. Ultimately, it's really a question of the sort of feedstock costs and the production costs, right? Again, going back to Europe, we're net importers of most of the products that we make. And that's because energy costs are too high to reasonably produce these things here. Now, we think that we might be able to crack that nut because we have a slightly differentiated technology that allows us to not be fully dependent on the cost of, natural gas or the cost of petrol and oil and all that kind of stuff. But ultimately, yeah, we look at where feedstock costs are the lowest and when we think that we can be the most economically value adding. And that's what guides us, whether that's, the Middle East, whether that's Asia, whether that's, North America, South America, we look at everything.
Maybe to add one thing, I feel most deep tech startups are also less in their sales, less geo-dependent than other startups. Because if I'm a fintech selling insurance, I choose one country, and then maybe I add a second one like 5 years later. Well, I think if your business model is based on technical innovation, that is almost always global by definition.
Yeah, it's interesting you spoke about China just before, because I'm literally putting together now a study trip to China in 2026, because it's just clear that anyone building deep tech and especially hardware need to understand what's going on there and just exactly how to navigate it. Planet A and World Fund and 2150 went last year, and it's on the back of their experiences. Like, this is something we should definitely all be thinking about as a European tech ecosystem. You're both smiling, so feel free to comment on that if you want.
I saw a frustrating stat this morning. China added the photovoltaic capacity deployed in Germany over the last 25 years in the last 6 months. I mean, HV has invested, for example, in Marvel Fusion, on the basis of this promise of free energy. I wonder if at some point photovoltaic will bring quasi-free energy and what that will mean for production in China. It's fascinating to think about it. But to quote Max, I'm also not a geopolitician, and I tend to talk about things I have no clue about.
That's why we have great board meetings.
Yeah.
Let's talk about board meetings. Let's talk about that dynamic. Founders, what should founders like? You're both very accomplished. You've both seen boards from both with Hitmeister for you, and for you, Max, of course, but also both as an investor and as a founder. I'd love to hear both of your take on when should a founder be using the board to make their decisions? When should they stand up and say, okay, I got your feedback, I'm going this direction instead? Like, can you talk a bit about the governance dynamics and how you as a founder should navigate that?
It's a Mexican standoff on this one. Okay,
So
so
we'll leave the long pause here because we had a very saying moment between the two guests on the podcast who were looking each other in the eye, trying to figure out who goes first.
No, I think then I'll go first. I was just being polite, of course. So if you go back to the function of the board, I mean, there's a certain set of governance things, so we try to avoid Max selling the company for €1 to his buddy or things like that, so there's a certain list of like protective measures, procedures, and so on. Let's put those aside for a moment. And then my philosophy is really the board and the investors need to be very, very careful to not overmanage the company, because the board members are not better CEOs, and it's very dangerous to be kind of armchair quarterbacks and trying to meddle into the affairs of the CEO. However, what I do feel is that board members, I say if I add value like 3-4 times a year, I'm doing pretty good if I don't kind of annoy founders like Max the rest of the time, which could be maybe a key hire, a push, an introduction to another fund. It could be an insight I pick up, because the advantage of being a board member, and especially investors, you see hundreds of companies, hundreds of founders. You just have a bird's eye view of how markets are developing. And I believe this you should try and translate into impulses. I think board members who have a tendency to micromanage or to try and be the better CEO, it can become very, very dangerous.
I think what I would add to that is at least what works for me and the board that we built is two things. One, we mentioned earlier that we don't have any climate VCs on our cap table. I think one of the things I was very conscious of is working with venture capitalists who have experience in scaling large successful businesses, which HV has done many times over, GV has done many times over, and all the other investors on our cap table have done. Because specifically what I was looking for in board members is people who can guide me through that journey and who've seen what great looks like and can make sure that we emulate that. And I think that's a really important point. And then the second thing that the way I specifically like to work with board members is different board members have different unique skills. Jan has operational skills that, some other board members who haven't run companies don't. And so Jan and I can spend time working on that together. Coincidentally, my next call is with Jan, where we're actually talking about hiring for a crucial management role. And, that's something where Jan has insights that are value adding and he doesn't give bad advice. At the same time, Jan is not the guy that I go to when I specifically want to figure out how we can optimize a certain R&D work stream, right? And Jan would be the first person to say, no, I'm not getting involved in that. Whereas, for that instance, we brought on recently Christoph Schilling, who's the founder of Genomatica, the leading, global industrial biotech company. And he's the perfect person to do that. So we have been relatively strategic about how we build the board. And then I think I like to work in a way where I, go offline outside of the board and work with individual board members one-on-one on certain topics where they're strongest in, so that we, to keep everyone working on the things that they do the best at.
Let's do a really quick on the air sparring session by Jan on your current issue with hiring for a crucial role. So tee it up in a generic way that it can actually be said on the podcast.
It's not really a challenge per se, but I think to reframe, I'm happy to actually openly frame the problem set, which is the business is going well. We're starting to think about the Series B and how the Series B comes together. As part of that, we're looking to combine two different elements of the business. One, we have a top co, the business, again, biotech, that has developed some really, really interesting technology across two layers. One is a manufacturing platform where we invest in, capital into production assets that manufacture chemicals, fertilizers, et cetera. The second is our AI platform. It's a computational biology platform that allows us to discover new materials and scale them up. And we've kind of done both. Now, those two businesses, essentially, and the production assets that fall away from that, have different IRRs, right? The growth rate at which you can scale, capital asset is simply different from the growth rate at which you can scale a computational biology platform. And so what we're trying to figure out collectively is how we do that. And, I actually think that Jan has been very proactive in thinking through different ways and different models and different capital structures. And so really what we're doing is we're now brainstorming what a role looks like that could help us continue to improve on that even more. I think that's probably as transparent as I can get. I don't know if that was the right way to answer your thing, because I think I was meant to say something that would piss Jan off, or vice versa. Maybe that, but I don't know.
No.
We
No,
we
not
have
at
that.
all.
We don't have that. We're on the same page on this one. So it's
No,
all good.
not at all. Not at all. My goal was for our audience to be able to see how an expert board member like Jan from a great firm like HV Capital would answer the question by a very successful entrepreneur.
I think the key point is not answering the question. It's about, given that Max knows so much more about the business and the details, is trying to support him in his thinking on this. And then maybe occasionally, interjecting something I've seen from another business or helping structure his thoughts, in a way when maybe the founder has his or her head in the thicket of problems and issues and challenges, etc., once in a while to help the founder lift the head up. But I think it's rare to say, this is, I know what you should be doing, because that's probably not the right thing. I think it's more, I don't know, in this situation, what are the implications, legal, financial, hiring, fundraising capability, valuation of the different parts of the business, these, trying to think through these plans.
Jan, if you were to go a bit out on a limb here and go into the conversation with Max on the air here, your next step would be to ask, try and probe and see how Max is thinking about the different topics. Am I getting that right?
So let's say now, to try and be more specific, a technique I quite like to use is to simplify things, and tell, in this situation, tell Max, okay, let's stop producing chemicals. It's low margin, high volume, low margin business with low valuations. Who cares? Let's go all in on AI. And then the other approach would be all this AI stuff. It's a bubble. It's going to burst in 3 days when people figure out the NVIDIA and vendor financing is all bogus. Let's produce chemicals like Germans have done since 500 years, and then try and paint a very stark picture and push the founder, the entrepreneur, to think through the implications, because in a situation like this, reality is probably somewhere in between.
Let me ask you another question that also from what you just said, Max. I'd love to hear about the preparation of a Series B. A lot of literature in Europe covers how do you raise a seed round, how do you raise a Series A. There's not a lot on the later stages. So I'd love to hear both of your take on the growth journey and what kind of changes, what are the dynamics that you really need to be aware of and that are completely different from the earlier stages.
I'll be in a better position to talk about this after raising Series B, to be honest. So I don't know. I think at least what I can talk about is that the risk profile of our business has materially changed, right? We've done, I think, a few things really well. One, we've validated our core technology, which is the binary stochastic risk, which is the risk that no one wants to take at the kind of early growth stage. And luckily, Jan was willing to do it. The second thing we've done is we've validated the pace with which we can execute, which I think is really, really important with deep tech, because until you've built out production assets, it's all theoretical and R&D driven. And then once you've validated, you can build up production assets very, very quickly. You've kind of shown to future investors that you can move as fast as venture scale returns want you to be. And then I think the third thing, at least in our business, is we've kind of shown that we can expand the total addressable market of our business, and therefore the corresponding potential market cap, by going both horizontal and vertical. And what I mean by that is we've expanded the product portfolio massively. We no longer just make one product, which is what we did 18 months ago. We now make 5 products with 10 in the pipeline. And then we've also added, as I mentioned earlier, this computational platform that allows us to basically drive high margin revenues, license our technology, et cetera. And so I think what I'm getting at least from our perspective, is since the Series A to the Series B, there's been kind of acceleration across a whole 3 or 4 different really important factors, each one of which is probably a startup in its own right, which then, gets the next round of investors incredibly excited about what we can do. And that's obviously what we're leaning into and the story that we're telling.
And one of the most important exercises we do, which we just did with another startup, is where we invested in a round, is to then these letters have become increasingly meaningless, but let's call it a seed, is then to figure out and back solve what do we need to raise a strong Series A, and to take an overly simplistic view. Let's say in typical deep tech companies, you have some function on supply and demand. And supply could be, we have a production facility up and running, we have a first of a kind, blah, blah, blah thing, and then on the demand side, we have maybe takeoff agreements, we have LOIs, we have first contracts, etc. And that kind of takes care of the kind of core fundamentals. Then we may need to have a section on IP, which is about freedom to operate, patents, this type of thing. We need to build an organizational capability where we have maybe key hires. And what I think is a really good tool for entrepreneurs is to kind of, I don't like OKRs. It's like management fetish somehow, but, to then say, okay, where do we want to be in 18 months? And how do I from that derive individual work packages for the teams? And that's a very good conversation to have between founders and investors, because most investors can kind of tell you what you need for the next funding round.
I'd love to ask you both about that a bit, because milestone-based investing has, of course, always been around and been the bread and butter, so to say, of the VC model. However, milestone-based investing is very difficult in deep tech. Oftentimes, things are moving in a different pace than you expected. And that's, of course, also back a bit to the lack of a VC playbook in this space, meaning that it's not as clear cut as building a SaaS business where you can say, well, either you hit these metrics or something is fundamentally broken and we can't fix it. Here, it's a lot more fluid, and you think that this is attainable, but you then learn something along the way that it is not. And for that reason, I also speak to some deep tech investors that say, well, the first investment is the easy one in deep tech. It's the bridge rounds that are difficult because you got to anticipate that they're going to come. And I'd love to hear your take on that, both of you, setting those milestones and how you then navigate through them afterwards and make sure that you, as a founder, keep the investor updated on, it's okay that we might not hit it. Like, let's keep the money flowing nonetheless. And from the investor side, also knowing that you should feel comfortable despite some timelines slipping.
I mean, I'm just going to come out and say it. I think the way that we hedged against that is we just didn't allow timeline slipping to be a thing.
Yeah, well, nice.
But we've just been super aggressive in.
Yeah, it's true.
We built a petrochemical plant in like 10 months. That kind of thing usually takes 3 to 4 years, and that was just. I think that's more going back to the thing I mentioned around culture and optimism and just going at it. Which, by the way, was the hardest challenge for us as a business. We about 18 months ago, we were an R&D science company, and now we're like a petrochemical business. And, soon we're going to be an operations business. And I always, Jan and I talk about this, ultimately we want to be a spreadsheets business where it's just a function of like, okay, what is the IRR on this asset? And so, I think that's been one thing that we've done that has probably been a little bit lucky, but also a function of focusing on engineering risk. And that's been the main journey of the last 18 months. It's been, we'd already validated our technology works to a large degree at the R&D stage in academia. And the last few months have been really focused around that. So that's probably my main thing. But we also spend a lot of time every board meeting making sure that we're on track and, talking about the timeline and, that then distills down to the whole company. So yeah, that's my flippant answer, but I think Jan probably has more insight.
I think, first up, I agree to what Max said. And this is a public forum, so of course I will. But I think it really is the case. People always say, oh, selling software B2B is easier because I'll have like some MRR scale up and run up and so on. Your reality is no. It's just a different type of risk. For me, the GTM motion in SaaS has become so incredibly hard that most startups fail there, and that's why you need to keep an eye on it. Obviously, in deep tech, in an ideal world, and this is the case for who have a very public offtake agreement. If they manage to build the plant, and it looks like it, the market side is the GTM motion is not a risk. It's been completely de-risked. So I think you have different types of risks. And regarding the milestones, I mean, in an ideal world, again, you don't have slippage. But then if you do, I think what becomes tricky for the entrepreneur is to show investors progress and value creation, which could be, progress on the patent, on the technology, on the efficiency curve, driving down the cost, where investors can say, oh, if this continues another 12, 18, 24 months, the company will be so much better that as a greedy, grubby capitalist, it's a really good idea to put in a bridge financing. If you don't have this progress to show that you're moving towards these value creation points, then it does become very hard.
Obviously, it's not easier to build a B2B SaaS business that's massively successful than it is to build a deep tech company. That's not the point, right? It's just that the playbook is much more thoroughly written and you know them in the different tastes and shapes they come. And then when you go to deep tech, there are many different shapes. And on top of that, a lot of results are quite binary. So it's a bit like, how do we dare bridge when we are looking at a binary answer that is not coming before we put this money in?
If I want to piss off my colleagues who do B2B SaaS investing, who I really respect for what they do, to me, it's become very well understood how a high-performing B2B software company looks like. You can use the Meritech, Bessemer, Cloud Index ratings, net dollar retention, churn, blah thing. As an investor, how do you generate alpha? Is by seeing something someone else doesn't see. And, I think that's what makes deep tech so interesting, is that it is complicated, it is hairy, but I really believe this is high risk, high return investing because it is not as well understood. And for us at HV Capital, being one of the largest European funds, however you want to define it, I think we're actually in a pretty unique position to help entrepreneurs in these hairy fields rather than someone who does only B2B SaaS and kind of focuses on that.
Yeah, I think you're absolutely right. And I think that as much as I welcome and love generalists coming into deep tech, I think it's also something that a founder should think seriously about. And you don't want a full board consisting or full funding round consisting of people with limited deep tech experience. Like, you can definitely have one because there's a lot of value from the generalist investors, but you also want some people that know exactly the journey you're about to go on. Am I somewhat correct in saying this, or am I oversimplifying, guys?
I don't know. I think I'd actually disagree. I think that I think from my angle, the most valuable skill set to have from any investor is people who've seen what greatness truly looks like. I think there's probably no shortage of, deep tech investors who have invested in a bunch of companies where the companies went nowhere versus the inverse. I'd rather work with people who have genuinely been part of the journey of building huge successful businesses, whether it's deep tech or not. Because ultimately, I think once you pass the R&D stage, it's kind of all the same stuff, right? It's how do I hire the best people? How do I move incredibly quickly? How do I, push against the boundaries of what's possible, whether that's in rolling out new SaaS widgets or whether that's, curing cancer. I think it's all really about moving quickly and building great companies, and having seen that before, I think for me, that's the most important thing.
I pride this podcast on being nuanced, and I think you're absolutely right. I think there's truth to what I said, and I think and there's truth to what you said. And I think that let's actually leave it there in terms of, because I do think that both perspectives are absolutely right. And obviously you have a dream investor that have done both, that understand the technological complexities and understand and have relationships with the partners and so on, because they come from a deep tech background, but at the same time have also seen what great looks like.
And by the way, that is maybe also a founder who is great to kind of turn it around, is who purposely constructs not only the board, but also the advisors he or she works with, is to really figure out, I have a football team, I need a goalie and a striker to stay in Max's world. How do I combine the two?
All right, Jan, I want to round us off.
I'd just like to say, I think that's the first time I've heard Jan do a sports analogy. I love it.
Yeah, he seemed proud enough to.
Yeah, I'm
to be
a
doing
huge
it.
sports fan. Jan is entertaining me here. I appreciate it. This is the true value add VC.
I love it, guys. Let's round off this episode with some closing realities and advice. I want to ask you, Max, for founders building deep tech companies in the industrial space, what do you think are the 3 most important lessons you've made?
I'm very wary of giving advice because, until I've IPO'd the company or sold it for, $50 billion, I'm always a little bit careful on that one. I think what I can say, one thing I feel strongly about that worked well for us, and I think is an interesting concept for deep tech companies, is we started working. A lot of deep tech founders will spend a huge amount of time working on their technology and developing the R&D behind it, and not enough time speaking with customers super early on. I think that's something that they should think about the other way. At least we did. We actually went to our very first customer before we even knew what product we'd make. We said, hey, here's the technology we're working on. It might work. It might not work. If it does work, here's some things we could maybe make. How do you feel about it? And we ended up workshopping our way into what became a massive, massive contract and a fantastic partnership. And so, I think that's the number one thing that I see with a lot of great scientific founders. They come out of their PhD or university, they spin out that great, tech that their dissertation is built on, and then they spend a huge amount of time building the tech and not enough time doing the commercials and figuring out your customer base. And we did it essentially almost the other way around, and it worked out fantastically for us. And so I encourage other founders to try and do the same. And VCs like seeing contracts, so it's not going to hurt them in the fundraising process.
Jan, I want to ask you, for investors and LPs wanting to back Europe's deep tech reindustrialization, what mindset shifts or structures are needed to make that possible?
I mean, LP can give us money and we're happy to invest it on their behalf. No, but I think, to me, the important part is A, being open-minded about risk and return, and then B, not transferring too many templates of kind of old knowledge into the space. Because on the one hand, thinking about risk return, if you look at kind of the different asset classes between public equities, private equities, real estate, yada, yada, yada. And this is something I'm actually working quite a bit on, how to get more European capital into our asset classes. People were saying, commercial real estate is a great asset class, until the market absolutely collapsed in the US and they were getting 80-90% write-downs, which I believe there's never been a VC fund that horrible, so and on the upside for return of whatever 5-6%. And so to take an honest look at the risk return profile of what we're doing, especially if you build portfolios of great companies, if you, as an asset manager, build portfolios of portfolios, I truly believe is an asset class, which is interesting from a risk return perspective. And for then my VC colleagues, I think what you cannot do is blindly come with your standard set of metrics, which you've perfected for other, let's say, to not always pick on it, but let's say, if I look at consumer, I look at CAC, LTV, retention. If I look at B2B, I look at NDR and churn and so on. Does the revenue profile look good for B2B SaaS investment? Of course not. Is there a lot of value in this company? Definitely. So I think as a VC, take the time, look at the business model, understand, the dynamics at play and, the potential strengths, and then do the work and do your investments.
Both of you have been amazing. I'm so happy we did this episode. I'm so happy that we did it despite you guys not being Danish and again being a Danish founded company. I have to say you both did an amazing job, and thank you for coming on the pod.
Next time we'll bring Torbjørn.
Exactly. My 2 co-founders are very Danish, so they make up for it, and we'll bring them along next time. Thank you so much, Andreas. It was a real pleasure.
Thank you, gentlemen.
Thanks, guys.
Before we start the show, a quick note. If you're building or running a fund, it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, Ace Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, Ace handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind, and a scale-ready back office should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover startups before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.